Well, our next guest has the most important catalyst he sees for investors next week. Joining us now is Vital Knowledge founder Adam Crisafulli. Adam, with the big jobs report at the end of the week, what can possibly get the market's attention before that?
Well, we have a few events before then. The ISMs are going to be interesting. They give you kind of a good first look at the month of September, and those will not be impacted by the shutdown, so we're definitely going to have those in hand. And then a few earnings reports, like you said, Carnival on Monday. Nike also is going to be very important on Tuesday. But I think the jobs report is really, assuming we get it, I think the jobs report is going to be the most important event of the week.
Given the questions about the shutdown and given the revisions that we've had in the labor numbers recently, does ADP perhaps take on more importance than it has in recent history when people kind of shrugged it off because it didn't line up with the official federal numbers?
Yeah, I mean, that's a good point. I definitely think that given some of the uncertainty around government statistics, that investors are seeking kind of alternative sources of information. ADP is a great one. It is a very robust survey of the private employment landscape. And so I do think that's going to take on more importance now, as we go forward. So, yeah, the ADP on Wednesday will be critical, too.
We've got more tariff news today, more announcements, Section 232. And, of course, everybody's focused on the Supreme Court decision, or I guess hearings ahead of a Supreme Court decision for the IEPA as well. How to factor that into the investment thesis here?
Yeah, so I think the White House is kind of undergoing a strategy now of announcing more 232 investigations and 232 tariffs as they look to put their trade agenda on a sturdier legal foundation. As you mentioned, the IEPA tariffs come under scrutiny. I think the assumption is that the Supreme Court will probably strike down the IEPA tariffs, in which case then it's going to be the burden is going to shift onto these 232 tariffs. It just creates a lot more uncertainty for corporate America. The ones last night didn't have a huge impact on markets today. If anything, I think there was a lot of relief around the details of the pharmaceutical tariffs. But it definitely it means more uncertainty for markets. And I think, the implications for treasuries are going to be very interesting. The IEPA tariffs are bringing in a healthy chunk of revenue right now. And if those were to go away and the treasury has to issue refunds, that could place upward pressure on yields. And that's something that stocks will be watching closely.
Yeah, something else I don't think we've talked about enough has been energy. Energy stocks were the best performing sector in the S&P this week. We saw a move higher in crude oil. All of this, much of this, tied to a shift in tone and rhetoric from President Trump towards Russia and the war in Ukraine as well. So are geopolitics here percolating in the background? Should folks be paying a little more attention?
Yeah, definitely. You did see an impact on oil prices. There was a report out about how OPEC does, and then you also did have this very aggressive pivot in Trump's approach to Ukraine. There was a report out today about how the White House is considering giving longer-range missiles to Ukraine so it could launch deeper strikes with Russia. So, definitely that creates upside risk on oil. You also had big copper news this week as well. So upward pressure on commodity prices does impact the outlook for inflation.
Adam, I'm thinking about job openings, the JOLTS survey. If there are higher job openings, perhaps, than expected, or the higher end of the range, do you think we see more doubt about whether we get a steady drumbeat of rate cuts from the Fed? And would that perhaps affect the market, especially small caps?
Yeah, I definitely think, that was a big theme this week in the market, especially yesterday, where you had some hot numbers in the morning with the weekly claims and the upward revision on Q2 GDP. So you had investors kind of questioning whether the Fed will be as aggressive as was anticipated, cutting at the last two meetings of the year. So if we do get, a hot JOLTS number, we get a hot jobs number on Friday, the Fed could easily skip October or cut in October and suggest they're not going to move in December and kind of go on an extended holding pattern. So there's definitely more anxiety on that front, which is why the risk is probably, I think a very strong jobs report would probably be negative for the market at this point, just placing upward pressure on yields and pushing Fed expectations out.